Kishor joins in on the show right now. Kishor, hi, morning. Great to have you today on ET Now. Kishor, your top line constant currency growth at 0.6%. Tell me what's caused the dent for this quarter and how is it that you would describe the quarter gone by?
Yeah. So good morning. I think automotive has for some time been going under pressure overall globally. First, due to the competition from China. Secondly, I think from the tariffs from the US, specifically in Europe, if you look at it. And the third was basically about the impact of the war on the raw materials and that's why pushing the costs up for the vehicle. All this has come in a very short period of time, while there are some of them has been there for a longer time. Specifically, the cost part, supply chain impact came very quickly in the last quarter, and it impacted most of the European OEMs, also some of the Japanese OEMs, and with all that, there has been a major impact on their profitability, on their performance. It came a bit suddenly. I think we had factored in something from the Japan because that has been there for some time. I think the Europe came very, very, I would say, sudden and across quickly. That impacted our performance. And after that, then we gave disclosure to the market. And while we had a lot of actions which were also already in place, not that we were responding to this situation, but ahead of time, we wanted to have our broad-based growth. So we have been working on that, but naturally, this happened very suddenly. Yeah, I mean, we have been in a position to do the quarter, which is not the usual KPIT quarter, but still a little better than what we had shared, that where we believe it would be. But that's where the story is. I think this has been the impact. And we do believe that many of those measures which we have done, I mean, the impact has happened because of 2 or 3 clients. And while the growth which we are talking about, the broad-based growth, is coming through 7, 8 accounts. So we believe that that towards the end of the year will really help us to grow and perform. Apart from the fact that the products and platform, AI-led transformation is in the place.
Mr. Patil, trying to understand what changes for you in the next quarter. You've suggested that Q2, in terms of margins, Q1 is the bottom. If Q2's top line number largely stays as is, how do margins get better or margins stay as is?
Incrementally, margins will get better. Incrementally, margins will get better. But as and when we will make a reasonable move towards the margin, because I mean, there will be some other levers which we will use, but there will be also some investments which we'll make in some of the new areas. So as and when the margins come back to a normalcy, I think that's when we will get the margins back. And that's what we expect in H2, more towards the latter part of the H2.
And, in FY26 Q4, you suggested FY27 will be strong. You've pushed that by maybe half a year, 6 months or so. How confident are you now of H2? That's really the golden question, which I think the street seems to be worried about.
I think the only point I would say is we are all living in a situation where if I would have asked you about 6 months back, what will happen 6 months later about some of these uncertainties which created with geopolitical, it's very hard, some of these points. So we understand that at the same time, we need a more resilient strategy. So actually, from that perspective, we have been building a very resilient kind of a strategy in terms of geography. For example, earlier, we were more focused on Europe, USA, and some part of Asia. Now, on Asia, we have doubled down. India, Southeast Asia, China, we are doubling down on that geography. Now, we were only on passenger car last year onwards. We have started focusing on off-highway commercial as that part. Apart from that, then we are focusing on adjacencies in terms of micromobility, etc. Now, beyond that, I think basically we double down on AI-led products and platforms and solutions which can go across multiple platform, multiple clients, not necessarily T25. So I think these are some of the steps which we have taken. And we do believe that this should help us to have a more resilient long-term growth. That's exactly our strategy is. So I completely agree with you. This has happened. I'm not saying that this not happen, but I think this is what as a company we have done and we continue to invest to do.
Love the calm nature, even despite all the volatility. But give us a sense, the timing of this, all these diversification measures you've taken, the timing of it, H2, should that where, is that where the top line starts to get impacted by these measures, or will it be slightly more longer drawn, say FY28?
So actually, they have already started contributing to the revenues now. If you look at the impact it would have, what the impact we had from the two clients, it's much higher than what the impact you see in the results. This has been at least 50% offset by the growth from these new areas. So I think that's why we believe that will help us to really that's why we are more confident about this strategy, the long-term viability of this strategy, and how we can have a more resilient and long-term growth as well as profitable growth.
Kishor, the other thing the street is wondering is that how is it that you're going to offset the current soft demand situation when it comes to some of your key customer cohorts, Europe and Japanese customers, for instance?
I did not get your question. Sorry.
No, I was just wondering, the street is wondering as to how is it that you're looking at working upon your key customer cohorts, Europe and Japan geographies, for instance.
Absolutely. And very valid question. So absolutely. The number one point is we already have a pipeline with them, in the sense we are already engaged with them on some other areas. One of the most important thing to improve their competitiveness we can look at is the cost reduction part. And as you remember, we have done an acquisition of a company called CareSoft some time back, and basically it took us some time to integrate and etc. But I think that will give us a very differentiated value to really help them to reduce their cost and improve their supply chain for the client in the actual manufacturing and the cost of the product. That is one part. The second thing is, the most of these clients, their revenue cycle now from the point of sale has gone to the whole vehicle cycle. So their after sales becomes a significant part of their revenue. So these are the areas in which we will be working with them.
Mr. Patil, therefore, I'm trying to understand margin confidence, right? Firstly, I wonder what would have happened had you not been able to offset the slowdown from Europe. So that's the one piece, but that's not happened. Do margins come back towards 20% for full year FY27? That seems to be your guidance, at least at this point. How confident are you of that?
That is not my guidance. We never said that it will come to that. I think, please don't try to interpret in a different way. We have very clearly said that this will be my profitability. It is 17.2% right now, and it will incrementally increase. As the revenues will come up, I think that will, in line with that, it will go up, is what we have said.
Okay, and therefore, so what should the FY27 expectation be in terms of the margin? If top line were to recover a wee bit towards H2, how should margins therefore evolve? You're currently at 16.2, you likely get slightly better in Q2. How should one look at the margin number therefore? Give us a sense.
We have not given any guidance on that. Sure. We have just said that it really depends upon the recovery. It happens in strongly in Q3 or Q4, depending upon that recovery will be there. But fundamentally, that is very dependent upon the recovery, and there are many other levers. There are many areas in which we are making progress. So overall, it will for sure keep on growing every quarter. That is the point we can tell you.
No, that makes sense. The other piece is with regard to AI and execution, right? We were speaking with one of your competitors and suggested that the timelines from conceptualization to launch within the auto space has shrunk quite sharply. What are you seeing on ground as a result of this, and what would the impact be, and when will the impact start to reflect in both numbers as well as orders? Give us a sense.
We are already doing some of these very large actual in production programs where the validation cycle, which you look at the European companies, they launch their product. Typically, they take a long time to launch the product. And that's where they, Chinese or some other companies, Asian companies, they are very fast. I think from that perspective, we would like to mm, the validation is like a 50% of that effort, and also it has an impact on the warranties and etc. So I think that's one cycle which we are reducing by half, so almost taking out about 1 year out of that cycle. We have done a couple of such large scale projects, so I think that's how we will continue to do. I think it takes time to get a OEM to continue to try different things. I think these are all traditional OEMs. It takes some time because it is not only software, it is infrastructure, it is tools, it is how their supply chain is there. So we have to work around this. So because we have already done it a couple of times, we believe this is some of the large program. And if you look at the warranty cost, for example, some of the warranty costs are maximum. Even if you look at US customers, it's quite high. So I think we have identified the right problems. We have the right solutions, right products. I think it is a question of an adoption, which we have started seeing. Now, how it accelerates will decide the quicker adoption and then the recovery.
Understandable. Kishor, great to have you today on the show. Thank you so much for your time and so candidly and patiently answering all of our questions.